Strategy is in a prime position to go parabolic if Bitcoin's price starts rising up, and I want to explain why that's the case. I believe Strategy's new method of issuing perpetual preferreds allows for an upward reflexivity loop that would go parabolic if Bitcoin's price starts running. The thing with these preferred instruments is that they do immediately increase the Bitcoin per share, but that increase in Bitcoin per share is not necessarily materialized until Bitcoin starts to outrun their break-even rate. So for example, let's say that Strategy gets $1,000 into one of their preferred instruments and they must pay back 10% per year on dividends of that instrument. So they could take that $1,000 and go buy Bitcoin with it, and then they would just have to be paying $100 per year on the dividends for that $1,000 that they received, which is crazy to think about because that $100 per year that they would have to pay in dividends would take 10 years for them to break even. So conceptually, Bitcoin's price could stay stagnant for a whole 10 years and then just grow at 10% per year for everything to offset, which is crazy to think about. What's even crazier are the reflexivity loops created when issuing shares to pay these dividends. So say you had to pay the dividends of $100 per year, you would have to dilute enough shares to raise $100 per year. So assuming around this current share price of about $260 per share, you would need to issue zero point 0.4 shares to pay $100 worth of dividends. So you would have to sell zero point 0.4 shares at $260 per share to get $100 to pay $100 in dividends. But if the share price goes up, you would have to dilute less shares. So say the share price went to $1,000, at that point you would only have to issue zero point 0.1 shares to pay $100 in dividends. So as the share price goes up, you're diluting less shares, making it more accretive, helping the share price go farther up, causing you to dilute less and less shares, creating this upward reflexivity loop. But this does work going in the opposite direction as well. If the share price goes down, you're going to have to dilute more and more shares. Say the share price crashed to $100 per share, you would have to issue one whole share to be able to pay off $100 in dividends on these preferred instruments. However, I will ride this volatility because I'm a Bitcoin maximalist. I believe Bitcoin's going up forever. And as Bitcoin goes up forever, the value of Strategy's assets will continue to rise, which will push their share price up, which means that they're going to have to dilute less and less shares over time, making them exponentially more accretive as Bitcoin's price goes up. Now, the key difference I want to focus on between the perpetual preferreds and their previous focus of convertible bonds is the fact of the amplification of dilution. So with the convertible bonds, they were diluting a set number of shares. For example, their most recent convertible bond agreement would allow them to dilute 2.3 shares for every $1,000 they received in convertible notes. On the other hand, with perpetual preferreds, the dilution gets amplified as the price goes down, but it's dampened as the price goes up. So it's creating these reflexivity loops where there's more dilution as the price is going down, but then there's less dilution as the price is going up. And I think understanding these reflexivity loops, as well as taking a look at Bitcoin's price year to date, actually gives us a pretty good reasoning for why Strategy's price year to date has done what it's done. So looking at Bitcoin's price year to date, I have two arrows on the chart. The first arrow here indicates when Strategy started issuing perpetual preferreds. They started issuing them in February, right as Bitcoin was starting to dip down for the year. And then I also have a second arrow pointing to what I call the Bitcoin stagnation phase for this year. As you can see at the start of that arrow to today, Bitcoin's price hasn't done much. It's mostly stayed around like $110,000 to $120,000. We have seen a little bit of volatility, but no significant pumps or crashes in Bitcoin's price. And then looking at Strategy's price over time, again, I have the far left arrow here showing when Strategy started issuing their perpetual preferreds, and then also the arrow on the farther right side of the graph showing that exact start of Bitcoin's stagnation phase, as I'm calling it. So we can see that Bitcoin's price chart was actually pretty similar to Strategy's price chart up until the stagnation phase. The stagnation phase, Bitcoin just stayed stagnant, whereas as we can see here, strategy, the stock price crashed during this stagnation phase of Bitcoin. So yes, strategy has been trading downwards, whereas Bitcoin has been trading sideways for these past few months. But I believe a large reason for this can also be seen in the volume increase in strategy's preferred equity. I've circled here this row showing strategy's preferred equity based on their Q3 earnings slide, and we can see that in Q3 alone, strategy has literally doubled the volume of their preferred equity, and that was largely done while Bitcoin was trading sideways the whole time, which could actually be a little bit harmful for shareholders short term compared to their previous model of using convertible bonds. Because with the convertible bonds, you could raise a whole bunch of capital to buy Bitcoin, and then you could watch that Bitcoin appreciate for years to come. And then years later, after that Bitcoin appreciates, then you would be diluting the shareholders who had already seen that Bitcoin appreciate. But with the preferreds, they have to dilute more frequently to be able to pay off these dividends, but there's no maturity on these preferreds. So yes, while they have to start diluting soon after they start issuing these preferreds, it may seem that it's not the most accretive if Bitcoin's price is staying stagnant or declining. However, as Bitcoin's price starts running up, this just becomes exponentially more and more accretive as Bitcoin's price is going up. None of this is financial advice, but personally, I am purchasing more strategy shares. I believe that Bitcoin has a lot of room to run up, and in the case of a bull market, I believe that these preferreds will capture that run up and have this reflexivity upward loop that I had mentioned before. In the case of a bear market, if I am wrong, I do believe that yes, this would hurt the price of strategy. However, they have been able to exponentially add to the equity, their preferred equity. So if they're able to keep adding more and more to their preferred equity, they're going to be able to add and scale their preferred instruments on the way down. And then as Bitcoin goes back into the bull market, they will have a lot of leverage at that point to capture that reflexivity on the way back up. My name is Zane Gillespie. If you like this video, please consider liking and subscribing to support my work.